Hi, we're talking about Your Money Matters on NDTV Profit because we understand that your money matters. My name is Alex Matthew. Today is a very special conversation. Every Monday we do what is called Money Monday, where we invite one of you into our studios to speak about your financial goals. And we also get a financial planner to join in to help you plan for them. The idea is that we help one of you, and through your discussion with a financial expert, we hope to address the issues that a lot of you watching this at home might also have. Sandeep Rao is joining in today. He's an IT professional and living in Bengaluru. We're going to talk about his financial goals. And to help him with those goals, I've got in studio with me Nisreen Mamaji, who's the founder and chief executive officer of MoneyWorks. Thank you so much to the both of you for taking the time. Sandeep, meet Nisreen. Nisreen, meet Sandeep.
Hello.
So, Sandeep, let me first have a snapshot of your financials that you've shared with us. You have, and correct me if any of these factors is wrong, you've got a cumulative income between yourself and your wife, who is also an IT professional, of 2.6 lakh a month. Your cumulative expenses are around 85,000 rupees. And so your savings are to the extent of about 1.8 lakh. In fact, 1.5 or thereabouts is what you can do on a monthly basis. Is that right?
Yes.
Yeah. And currently you've got direct stocks that you've invested in, and you've got mutual funds that you've invested in, and you've split them, I think, evenly. You've got direct stocks of a little over 1 crore of rupees, and you've got mutual funds of about 1.15 crore. You've also got a PMS that you're investing in. Is that right? 50 lakhs?
Yes, correct.
Okay.
Correct.
And you've got the rest in real estate, about 70 lakh rupees, and gold, which is jewelry, coins, and SGB of about 70 lakh rupees, and a total of about 4.96, nearly 5 crore. That's right?
Yes.
Okay.
Yes.
So why don't you take me through your primary financial goal? Of course, the bigger ones are retirement and saving for your child's education, but you also got a plan to buy a car. Tell me about that.
Yeah, sure. So my current car is a little above 10 years. So I want to change it when it is 15 years so that I don't have to go on with a revalidation and all. So I want to probably at that time I would want to buy a electric car, which in today's terms would be about 20 to 25 lakhs. So I'm expecting it to be less than 30 lakhs in about 4 years. So I want to do financial planning so that I can buy it without taking any loan at that point.
Sure. So congratulations, Sandeep. In fact, I was pretty much impressed with your planning. I think you and Krupa have been, very frugal in your expenses, and, you're earning also pretty well, obviously, because you belong to this industry. And I was quite impressed with the way that you've planned out all your goals and also the detailed, analysis that you have done as far as your goal planning is concerned. As far as your car is, concerned, I think that you can definitely get your car. I think you're planning to have that in the next couple of years in 2029. And, from Krupa's cash flow, you can definitely look at the car, in 2029. I think it's about 27 or 30 lakh rupees. So, between the two of you, you have detailed, the investments as well as the goal planning. So you can, I have combined the entire assets, yours and Krupa's, and I worked out a cash flow per year. Now, in 2029, you can definitely go ahead with the, from the corpus that you have, because you have various assets, okay? You have lump sums, you have SIPs, also you have your PPF and EPF, where you are putting in a monthly amount, okay? EPF, you're putting in about 24,000 rupees, and your SIPs are also there between you and Krupa. Now, since you have already taken the lead and mentioned that, these are the assets from which you would like to purchase your car, these are the assets from which you would like to, work on your son's education from Krupa's, and the retirement we have worked out from yours. So yes, from the combined assets, you can use any of the cash flows from the mutual funds, which is your lump sum and your SIP, and you will be able to withdraw that certain amount for your car in 2029.
Okay, so that's the straightforward answer to the question that you had, Sandeep, but we've got much more to discuss, right? Because I am curious about the investments that you've made, did you have certain base assumptions on how much you will need? You're now in your early 40s. Did you have a base case assumption as to how long you'd like to work for? You don't have dependent parents, so you have just one dependent. Have you thought of how much you need to set aside for your retirement?
Yes. So what I've done is like I've went with the current expenses, which I consider that okay, I might not have some of the expenses, so I've brought it down to about 70,000 in the current value, and then I've extrapolated like what would be the future amount that I would require. So I've put in an inflation numbers of about 8%, slightly higher than 6% what we have, because I'm considering the lifestyle inflation, which would be typically slightly higher, and at that point in time probably will need more of a medical expenses. So inflation I've calculated it little higher. So then I've calculated based on that. So I've brought it in what would be the current amount which I would need at my retirement time, like wherein I can roughly take out 3% of my corpus as the withdrawal rate annually. So that is how I've done the calculation.
And what is the value that you came up with?
It's about 1.35 crores.
Okay. Is that appropriate, do you think?
So basically what, Sandeep, my advice to you is that your current expenses are around, say, about 75,000 rupees. You're planning to retire at age 52, which is about 10 years hence. In that case, your current expenses and your lifestyle, minus, obviously your son's education, because that's a separate entity completely. So your home running and, the expenses that you want to do as far as transportation, utilities, and, salaries of staff, etc., would be approximately, if you, inflate it at 8%, as you have rightly said, that you're inflating it on a higher level, it would be around 150,000 rupees. So on an annual consumption, it would be 18 lakh rupees, okay? You've also been concerned about keeping on a health corpus, which was a very smart thing to do. So, we've budgeted on, say, maybe 1 lakh a year for the next 20 years for, maybe any kind of expenses. Obviously, you won't be taking it every year because, God willing, you won't have any kind of health situation on an annual basis. But that's the kind of liquidity that will be provided to you through the planning. You can assume that. And also, you've mentioned your holiday.
You want to spell that out, Nisreen, because you're talking about him setting aside 1 lakh rupees every year.
No, withdrawing.
Withdrawing.
Yeah, setting aside.
Explain that.
Yeah, sure. So basically, since you have a lump sum corpus, now we're looking at the withdrawals from your age of 52, which is in 2035.
And what is the base case assumption for? So what he's doing right now is saving about 1.5 lakh every month, right?
No, he's saving higher.
So he's saving, okay, 1.7.
Yeah.
So clarify this for me, Sandeep. You're saving about 1.7, 1.8 lakh rupees per month?
Yeah, roughly around that. So again, it is not the same amount every month, right? So it fluctuates. So we have this quarterly variable and things like that, right? So I would roughly put it about 1.5 to 1.6 lakh on an average.
Okay.
All
So
right,
1.5 to 1.6 lakh per month. So what have you assumed in terms of his corpus over the next 10 years? Where does it reach? And then from there, if you can talk about the withdrawals.
So yeah, that's a very interesting point that Alex has raised, because that's the crux of the matter. So Sandeep, SIP is about 87,500 rupees. Okay, this is including the EPF that you're putting in, about 24,000 rupees. Your current value is about 2.35 of all your investments, okay, which is your current corpus, including the direct equity, your PPF, EPF, NPS, your lump sums, and your PMS as well. Now, if we, forecast that, if you future value that to your, 7 years later, because 2032 is when the first installment for your son's education comes up. So we'll start with 2032, which is 7 years hence. At that point of time, your corpus personally will be about 5.7 crores, okay? So Krupa's I'll discuss later, but this is where you start off with, including the future value at 9%, okay? So we've worked out a couple of scenarios for you, just to give you an idea of, when do you run out of the money. So since you have rightly obviously suggested 9% as your compounded annualized growth rate and inflation at 8%, so this is the corpus that you will start with in 2032. Now that's the time I think that you want to buy your home, right?
Correct.
Right, so...
And what have you budgeted for, Sandeep?
I've budgeted it about 1.5 crores currently, so it may go a little higher again depending on my cash flows at that point in time.
Sure. So what you can do is, you've also indicated that you would like to use the HDFC Balance Advantage Fund, and you have 2 properties which will be worth 1.1 crore at that time. So you will be withdrawing about approximately 48.5 crores from the HDFC BAF, and the balance you will be selling those 2 properties that you have, the sites, and you will fund that for the property in 2033. So that's entirely possible, and you're good to go with that. In 2034, also you have another installment of, your retirement starts from 2035. So as far as you are concerned, you are funding the property, and Krupa is funding the child's education. So she starts in 2032. And you have also indicated, what your future value will be. So, you've said possibly it's going to be 20 lakhs, 15 lakhs, 15 lakhs starting from 32 to 35. And if there is a shortfall, you're going to be taking an education loan, because currently, you're not exactly sure what the education will be, but you've said the future value will be so many, installments, which we are going to be using from Krupa's portfolio. Now, she's starting with the future value in 2029 for about of 2 crores, okay? So the first, obviously, installment will be going towards the education, 4 years, 20 lakhs in 2032, and 15 lakhs from 33 to 35, okay, to 36. So there you are planning the undergraduate and possibly the postgraduate education. After that, you are also planning his marriage, which the future value will be about 47 lakh rupees. So that again, we have used that because you have indicated that you would like to use it from Krupa's portfolio itself. Okay, anything that you want to add over here? Because I'm just continuing with the cash flow. It's a lot of information.
There's a lot of numbers, Sandeep, that you've just been subjected to.
Yes.
And see, the bottom line that appears to me is that you've actually done all of the right things so far. You've ticked all of the boxes. So let's get into the brass tacks of it. What are the questions that you have? Because you have certain questions, as I understand it, about the mutual fund investments that you've made and about the direct stocks that you've invested in. Because as I understand it, you pointed out that you've only got a single-digit CAGR return over the last several years in your stocks. So you're wondering whether to switch that out into the mutual fund space. And the other thing that I'm curious about, and that I want Nisreen to comment on, is that you have 2 properties, as I understand it, that are valued at 70 lakh rupees, and you expect it to go to 1.1 crore in the next several years. My only concern, and something that I have seen happen, is the inability to very quickly liquidate real estate. So do you have a backup plan in place there? Is that something that you've thought of?
Yeah, so my thought is that I will probably sell it like how we would do with the equity investment, right? So I would start the process maybe 2 years in advance. It will not be like right at that time, right? Because even the capital gains, like we have 3 years to reinvest, right? So I'll start it at least 2 years before my goal. So that is the thought process. So when I'll start liquidating that. So even if it takes like 6 to 8 months or even a year, I can still wait. So it need not be at the last minute. So that's the thought process that I have for liquidating the property.
Sure. Also, while analyzing your mutual fund portfolio, there were a few comments which I thought I'd share right now. So we worked out the entire asset allocation between, large cap, your direct equity, PPF, PMS, mid cap, etc., and hybrid. So you have about a 24% already, holding into large caps, whether it is index or whether it is mutual funds. So you could possibly look at, stopping Nippon India Large Cap Fund and starting an SIP in the small cap fund, because you have about 10 years, So an SIP maybe in a small cap would probably yield you a little more, because you have thematic about 7% and your mid caps and small caps are less than 1%, okay? So from the 10-year planning point of view, you could stop the Nippon India small cap and, look at, the large cap, and invest instead in the small cap fund as far as your SIP is concerned. As far as your direct equity is concerned, if you aren't completely satisfied, with the returns that you are making, because sometimes for a retail investor, it's very difficult, to select the stocks, and you might need some professional help in that area. So you could either look at a PMS which is performing well for you, or just switch over to, you know, a mutual fund. And in that case, you could look at a flexi cap fund or a large cap fund and a multi cap fund. So you look at about, sorry, you were going to say something?
Does he, so a couple of questions. Sandeep, are you continuing to invest in ELSS?
No, I am in new tax regime, so I have
Yeah.
not invested in the ELSS.
Okay, so so one question would be he would switch out of that, and I see that he's got several mutual fund schemes.
Sure, sure.
Would you suggest a consolidation of some of this, or do you think that it's all right to have these many schemes?
You know, now that his SIPs basically are into, you know, Nippon 50-50, that's the Nifty 50, that's,
Yeah.
you know, a large cap. You have iPro Nifty Next 50, then you have Mirae Asset mid cap, you have small cap pharma, and you've taken up, you know, a thematic call of pharma, which I think that you should continue, and you also have IT also, which you should continue. So in the, you know, SIPs, I don't suggest any change.
His portfolio?
Yeah, and he also doing BAF 30,000 a month, which I think is a very good thing to do, because you know, you're going to plan that for your property, which is a few years away. So it's good to have you know, not 100% equity fund when your goal is a little closer, and also to have some liquidity, because in case there's a crisis or something, you can, you know, easily withdraw from a dynamic fund, asset allocation fund, rather than from a 100% equity fund, where you know, you might feel that the you know, you aren't getting your required return at that particular time. So that's good that you're putting in you know, 30,000 rupees in the BAF, and otherwise I think that you can continue, because you know, it's fairly varied, and only increase towards, you know, like a flexi cap category. That part you can you know, give up a certain amount of large cap and introduce a flexi cap and a little bit more of mid and small, because I find the portfolio lacking in that.
I'm seeing Krupa has got a lot more schemes than you have, Sandeep.
Yeah,
Do you discuss the schemes with her?
So yeah, so that's true.
Sorry, say that again?
No, she wanted to try out few things. So she's relatively a new investor, so she tried out a few things. So yeah, even I have pruned down my list. Even I had a bigger chunk, so but I have come down there. So my question was, like you mentioned, to go with the small cap, right? So currently, like I have exposure to Nippon small cap. Should I continue in
That's
that?
the one where, you continue the Nippon small cap and they add your SIP there. So stop in the Nippon large cap, start in the small mid cap. As far as Krupa is concerned, in the small caps, I'm sorry. Stop in large and start in small. As far as Krupa is concerned, she can, you know, redeem on completion of her 3 years in the ELSS fund. She has got an ABSL ELSS fund, and instead of that, continue her SIP or the, you know, the returns itself, the corpus, you can switch it to Motilal Oswal mid cap fund. Okay, so that maybe you'll, you know, find the that option better. And Mirae Asset liquid fund, you have about you know, a small portion of about 70,000-80,000 rupees. So you can use that for your earlier you know, redemptions, or you can switch it right now only into your large and mid cap fund, because you don't keep anything in a liquid fund unless you actually have a goal of using it in the next, you know, 1 to 3 months. So that's something that I notice. Even if it's a small amount, it's always put to better use in a higher yielding, you know, possible mutual fund. So Krupa is, you know, doing an SIP of 70,000 rupees. She can continue all the others. There's only one change for the ELSS, depending on also your, whether you've gone in for the new regime or the old one.
This is absolutely fantastic. Sandeep, I've very rarely come across you know, a couple that has gone through the kind of details that you have. And also, kudos to you for having planned it, I think, together, but also keeping it separate, because this is something that a lot of people don't end up doing. One person invests for both, or one person invests and the other person saves. So it's great that both of you are investing. Any specific questions that you have for Nisreen?
Yeah. So now that we are talking about like going into BAF or multi-asset fund, right? Any particular thought which one should we go, right? I mean, I was also thinking on the same lines. Like I was looking at ICICI Prudential multi-asset fund, or Parak Parik Flexi Cap Fund, or even Nippon India Multi-Cap Fund. So these were the 3 funds that I was looking at.
Sure.
So any thoughts there?
So you can also look at the UTI multi-asset, which has a larger proportion of gold. So White Oak and UTI both have about 90 to 20% of gold. In the next couple of years, we can, I mean, of course, commodities are already factored in, but as a hedging instrument, you can look at a higher percentage of gold. iPro will have a slightly lower percentage of gold. So, both work very well as far as the multi-assets go. If you're looking at FlexiCap, you can look at Invesco FlexiCap or HDFC FlexiCap as a choice to Parag Parikh as well. And if you're looking at multi-cap, you can look at Franklin Templeton multi-cap and Mahindra Manulife multi-cap. So those are the few choices that you have in terms of, not deciding the cap yourself. Okay, but the thing is that a retail investor rarely looks at rebalancing the portfolio. So I feel it's also good that you select the category and then just let it flow from there, and then rebalance maybe when you're closer to the goal.
Just a couple of questions from my end, Sandeep. You've said that your plan to retire is at 52. Does Krupa also plan to retire at 52?
Yeah, somewhere close by, right? So once our son's education and his he's on his set on his course, right? Then probably she will also take retirement.
Okay.
That's the thought.
So I just want to sum this conversation up, because we've had conversations about all of your financial goals, and I think, kudos to you once again for having planned it the way that you have. I just want to establish that you've done the right things here. Okay, so Nisreen, the question is, he's got a primary goal of buying a car in 4 years. That's pretty easy, right?
Right.
He's got a pretty large corpus that he's saved up over the course of the last several years. The second one is retirement at 52. He can do that as well?
Absolutely.
And what is the corpus that he needs at that point?
So at that point of time, his corpus will be about 6.2 crores.
Yes.
And he's also kept an annual vacation corpus, which I really appreciated that.
Yeah.
Because, you are you've worked all your life. You've been, planning so well.
I'm glad.
And, it's really, as you said, Alex, kudos to him for even planning the holiday part.
Fantastic.
Okay,
So,
because then you really know that you're in the green.
Yeah. And he's planned his son's education. Irrespective of what he takes up. If he requires less, then he has more set aside for his own requirements and his son's wedding. All of those things are planned. Sandeep, this is the way that I think all of my other viewers should be planning their finances. So thank you so much for joining me today and discussing this with me and with Nisreen.
Yeah, thank you so much for your kind words. One last question, if I may, right? So I just wanted to understand, if you have to move from direct stocks to a mutual fund, is this the right time? Because everything is in red, right? So I was thinking that it'll lessen my tax burden. So is that the right time, or do you think it's better to wait and...
Sure. So, you're going to be moving parallelly. So, you're exiting at a certain index level, and you're also entering at a certain index level. So, in that sense, wherever the pain is the least in terms of, capital gains, I think you should do that. But make sure that you don't sit on the liquidity, but you take action immediately and reinvest, the liquidated funds. Because it's never the right time and it's never the wrong time, but it's the time that you spend in the market, which is very relevant, from the financial planning point of view. And so keeping in mind the entire cash flow, just our last few words, that even if you calculate at 9% compounded annualized growth rate, you will still have about 87 lakhs, in your portfolio at 870, and thereafter you will start withdrawing from Krupa's. So between the two portfolios, you're going to be able to meet all your goals, including your travel plan and your medical emergencies, and your retirement also, with an 8% inflated figure every year.
Fantastic.
So, congratulations for that, Sandeep.
Congratulations, Sandeep. Thanks so much for joining me today.
Thank you so much, Alex and Nisreen. Thank you.
All right. Nisreen, so we have a couple of minutes, but I want to ask you this, right? The primary goal was to buy a car.
Sure.
And he set aside a pretty sizable amount, right? 25 to 30 lakhs.
Absolutely.
Just to complete that point, is this a lot of people go out and buy cars on loan? Do you think that this is the right way to do it, or should you plan for it like he has done?
Right.
Say that I'm going to do this in 4 or 5 years, and I don't want to take a loan. Is that the better approach?
So, it depends on whether you have investable or, surplus. So either you take an SIP or you take the loan. Now your SIP, if you calculate it as what Sandeep has done, is at about 9%. But your loan is costing you 9.5% to 10%. So therein lies the question. Okay, if you have assets which have yielded you, say 12%, in the past, and you're expecting it to grow at about 10, 11% in the future. So at every point of time, you compare the rates. What is the costlier decision? So we prefer, over the longer term, that a person always invests in an SIP. Okay, so instead of, you have to do a bit of both, right? So maybe you can do a 50-50, pay the EMI 50%, or use your investable surpluses. And the balance amount, make sure, like suppose your EMI is say 20,000 rupees. You brought it down to 10,000 because you're using a down payment from what you have. But the balance 10,000, always put it in the SIP.
Got it.
Because you have the liquidity. You're able to afford the EMI. But make sure that you are, make these small changes in your mindset to make sure that your EMI and SIP run consecutively.
Sure.
So you
Don't stop.
Don't stop, yeah.
Don't stop the SIP.
Don't stop the SIP, because if you bought the, you put the down payment and then you say, okay, TK, now my EMI is only 10,000 rupees a month, but you have that balance 10. So immediately start with an SIP of that 10. So you have taken care of the interest burden on the loan that you've taken. So do a little bit of both. Sometimes even that works, because from your comfort level, that you're not reduced your investable surpluses or your corpus. You have a corpus of say about 15 lakhs and you're using 5 lakhs for the car. Sometimes that hurts you also.
Yes.
So you have to keep your mental balance and make sure that at every point of time you're comfortable with the planning.
So thanks so much, Nisreen, for joining me today. Pleasure having you in studio. And by the way, in case you watched this and you're feeling a little worried about your own finances, because Sandeep clearly had everything planned to the T. But not everybody does, and that does not mean that you cannot have a financial plan yourself. If you've got a plan that you want to set up, or if you've got a goal that you want help with, don't hesitate to write to us on our social media platforms or the WhatsApp number that should be playing on your screen. In the meanwhile, thanks so much for watching. This is NDTV Profit.